Hi, everyone. Welcome to the latest Carson's Take 5 with Ryan and Sonu. Sonu, the worst 6 months are upon us. We're going to hear a lot about that. It's known as sell in May, go away. But for this particular video, we are titling it Buy in May and Stay. You want to talk about what is sell in May and why do they say go away quickly? So, what's it mean?
And when we say stay, you can still go on vacation, right?
It's true. It's summertime. Yeah.
Now, the whole idea is market returns historically, maybe, I don't know, you're going to tell me, were weak between May and October or so?
Yeah, till Halloween, actually, till end of
Halloween.
October.
Okay, till Halloween. But apparently, for the last decade, that hasn't been the case, right, Ryan?
You're right. I mean, these upcoming 6 months, May through the end of October to Halloween, S&P's up, I'm going to use air quotes here, only 1.7%. That is the worst out of any possible 6-month combination, higher about 2 out of every 3 times. Again, one of the worst scenarios. The best 6 months is November until April. So you could say we're exiting the best 6 months. But just some context around this, Sonu. The last 10 years, the sell and May go away, these 6 months have been higher 8 out of 10 times. One more for you. May has been higher 9 out of the last 10 years. Maybe they should call it sell in June. But the key thing is, listen, there's a lot of other factors. We're going to talk about the economy here in a second. We don't think you should sell in May and go away. And another reason for that, this is an election year, as everyone is probably fully aware. In an election year, Sonu, you tend to get more strength during these weeks or during this 6-month period, and you tend to get a summer rally. June, July, August tend to historically be quite strong in an election year. So there's more to it than just that. But if you hear on TV, sell and May go away, yes, you should be aware of it, but we do not think you should sell. And by, again, go away means just sell stocks and probably go to cash, I guess what they mean. We don't think that's the case. Anything else on sell and May go away? Then we can talk about the economy, Sonu.
No, we've had a rough April, and that's normal, right? Volatility in markets is normal. You and I have talked about that before. We've had, over the last year, we are up, 25, 30% over the last 5 months, 6 months. Markets are up in November, December, and the first 3 months of this year, too.
5 in a row.
So an April pullback, may not be the worst thing to shake some of those, to shake some of that exuberance away. Let's say, I'll put it that way.
No, you're right. I mean, listen, up 5 months in a row, that's a really long win streak. It was great, right? But all good things do eventually come to an end. Stocks were down in April, after 5 months in a row up. And again, just without getting too into the weeds here, I've taken a look also, so at 5-month win streaks, take a wild guess. 3, 6, 12 months later, you tend to get better than average performance. Why is that? Because long win streaks happen in bull markets, and stocks do better in bull markets. So to put a bow on this first part of the discussion, sell in May, go away. The worst 6 months on average are here. Lately, they haven't done as poorly. And by the way, in election years, you tend to get continued strength during these worst 6 months. So we are not advocating to sell at all. We are thinking, actually, as the title of this is buy in May and stay, so kind of a playful play on that. So how we do it? We got about a minute and a half. So let's talk about the economy. GDP, that's how our economy is doing. Gross domestic product, the headline number, came in a little weaker, but you dug in and you think the economy is just fine. Take it away for about 90 seconds here.
Yeah, GDP growth for the first quarter came in at 1.6%. Just to put that in context, in the fourth quarter of last year, the economy grew after adjusting for inflation. That's what we call real GDP. That was 3.4%. So 1.6 is well below that. Over the pre-pandemic, before 2010 to 2019, the economy grew 2.4%. So 1.6% seems like, oh my God, is the economy slowing down? Well,
slowing in a hurry. Yeah.
Right. Turns out no. That's because there are 5 pieces to GDP. There's household spending, business investment or business spending, government spending. Then there are 2 volatile pieces, inventories and net exports, which is the trade deficits, exports minus imports. Turns out inventories and net exports pull down GDP growth by 1.2 percentage points, right? You take that out, then you get the pieces that we are really interested in. How much are households, businesses, and the government spending, right? And that was up 2.8% in the first quarter. And that's comparable to what we saw in the second half of 2023. That's really strong, right? And that's above what we saw from 2010 to 2019. It was 2.4%. Take out government as well, right? So you're just left with households and
by the way, I'm sure many of us will be fine with taking out the government. That's fine. Yeah.
Government counts, but take it out. Government spending eased in the first quarter. If you just look at household and business investment, that was up 3.1%. That's really strong. That almost matches the strength we saw in the last quarter of 2023. Like I said, that's a big deal. It tells you the economic backdrop here is strong. That's good for profits. That's good for
Mhm.
the markets as well.
No, absolutely. So again, the headline number was a little bit on the weak side, but when you kind of peel back that onion, we found consumption is strong, investment is strong, housing's been coming back,
Mhm.
government spending is still there. So again, we don't get too complicated here, but we do not see any major warning signs from the economy. So with all of that, this is your latest Carson's Take 5. The next 6 months historically can be weak. We don't expect that in the economy. They're telling us it's weakening very quickly. We would disagree there as well. With all that, everybody, we'll see you next week. Take care. Thank you.